Shares of stocks rose on Monday while investors seem to be anticipating the big tech company's earnings announcement, as well as other corporations' announcements this week. Today, the Dow and S&P 500 set record highs. The Nasdaq gained as well, and shares of Tesla hit an all-time high with a market cap exceeding $1 trillion for the first time. Shares of Facebook rose 1.3% after early morning losses, while Apple stock rose by the end of the day. Shares of Amazon and Microsoft both closed less than 1% higher, but dipped at different points in time throughout the day. The stock market was on a high thanks to the energy industry on Monday. West Texas Intermediate hit $85, while shares in ExxonMobil rose 2% and Chevron improved by 0.9%. This week earnings results will be centered around the big tech companies, Facebook, Apple, Amazon and Alphabet. These are some of the top-weighted components of the S&P 500. Stocks have done poorly this year, after experiencing rallies in 2020. When these types of orders were abundant, demand for technology that allows people to stay connected grew significantly. Based on recent events, analysts are expecting all companies in the sector to post estimates topping results. The long-fought battle with overproduction is finally coming to an end. Many tech companies are voicing their concerns about the impacts of global chip shortages and rising labor costs. These factors could potentially be a concern for tech companies. Wedbush analyst Dan Ives wrote in a note on Sunday that, "We continue to strongly believe despite the lingering black cloud chip shortage that 3Q tech earnings will be standouts this week," thus helping drive the sector higher into year-end as the street continues to underestimate the fundamentals of this multi-trillion digital transformation playing out among consumer and enterprise tech names. This week will be particularly busy for earnings, with over 170 companies in the S&P 500 posting results. As of last Friday, around 23% of the 500 companies on Wall Street's S&P 500 list had reported actual results for the third quarter, and among these companies 84% exceeded analysts' expectations for earnings per share. The earnings growth rate of the S&P for this quarter was 32.7%. There were still companies yet to report results, but estimates for third quarter were high. This would make the third highest earnings growth rate since 2010 for this index. In overnight trading, U.S. stock futures remain steady ahead of a slew of technology earnings which the broader market has never been closer to breaking record highs. Dow futures rose by 0.14%, S&P 500 futures increased by 0.25% and Nasdaq futures climbed by 0.36%. As of the close on Monday, 84% of the 117 companies in the S&P 500 that have reported earnings beat expectations, according to Refinitiv. This is a huge change from this time last year where only 40% beat estimates. Expect S&P 500 companies to grow profits by about 35% in Q3 from this year's previous quarter. Ryan Detrick, chief financial strategist at LPL Financial said that, earnings season is off to another great start, but now the big test is will the big tech names step up? With stocks at all-time highs, the bar is indeed quite high and tech will need to impress to help justify stocks at current levels. Twitter, Hasbro, JetBlue, Lockheed Martin, Novartis, PulteGroup, Advanced Micro Devices, Chubb and Robinhood also report their quarterly earnings tomorrow. The new home sales report will be released at 10 a.m. Eastern Time tomorrow. Economists polled by Dow Jones are expecting that home sales grew 760,000 in September following an increase of 740,000 the month before. Today is another day that makes Tesla shareholders extremely happy to see the stock price gradually reach the all-time high. Tesla's share prices have risen for the fourth day in a row, bringing their total market value over $1 trillion for the first time in the company's history. The stock closed higher on the day by 12.7% to reach $1,024.86 per share. Tesla's year-to-date advance came in at nearly 45.2%, with the stock outperforming against the S&P 500's 21.6% rise over that same period. Though Tesla's market cap is now a respectable $1 trillion, it now has to join the ranks of those mega-cap tech companies with a market capitalization of at least that much too. As of Monday, the only US-based companies with a market cap over $1 trillion were Amazon, Apple, Microsoft and Alphabet parent company Google. Facebook was also last a member of the $1 trillion club in late September. Earlier today, Hertz, one of the world's biggest car rental companies, ordered 100,000 Tesla cars. Delivery will happen by the end of 2022. Hertz is aiming to offer the largest EV rental fleet in North America and one of the largest in the world. It's also investing in new infrastructure for electric vehicle charging, which will be available internationally. The update also came after Tesla reported record third-quarter deliveries globally earlier in October, with the company managing to push through widespread chip shortages and other supply chain challenges to hand over nearly 241,400 vehicles in the third quarter. These were driven again by the more affordable Model 3 and Model Y vehicles. This all-time high in deliveries, combined with cost-cutting measures, helped Tesla post a third straight record quarterly profit for its fiscal third quarter. Earlier this week, Tesla reported its earnings and reiterated their previous growth forecast. They're aiming for a growth rate of 50% every year until 2021. Over the last few updates, Tesla has received positive analyst attention, which has convinced some investors to become more bullish on the stock. For example, Morgan Stanley's Adam Jonas raised his price target for Tesla's stock from $900 to $1,200. He also reiterated a strong overweight rating on the stock. The company is making over $10,000 of profit per car globally in what is arguably one of the most difficult supply chains ever seen by the industry. Thank you for following.